Since we're on the subject of IT, let me welcome on board the management as well of HCL Technologies, considering they are the ones which have actually performed the best so far out of all the IT names. Look at the way the stock is actually reacted, 3.5% higher thereabouts for HCL Technologies. Actually, not just HCL, even TCS. A quiet session for TCS to start off with, and now we've seen a meaningful recovery also play out, 0.5% higher for TCS, which was actually one of the biggest drags yesterday after its earnings, which came by day before post-market hours. Let's also check in on Infi, because Infi also has seen a bit of a recovery actually from those opening lows, though you've not seen a material one at that, still down about almost 38 points or so. But let me welcome on board Vijayakumar, the CEO and MD at HCL Technologies, also Prateek Aggarwal, the CFO on board. Welcome both of you. Thank you so much for taking the time out and joining in. Mr. Vijayakumar, if I could, start off with you. In the press conference yesterday, you sounded very confident about a sharp recovery and strong performance in the second half. What gives you this confidence, given that none of your peers have that?
Yes, I have very clearly laid out what is our game plan for Q3 and Q4. First of all, Q3 has three big components that really contributes to the revenue buildup. First is we have a large deal which is going live on 1st of November. That will contribute a reasonable amount of revenue for Q3. Software business, it is seasonally the best quarter. So you will see a spike in our software business in Q3. And all other bookings that we have done, they will contribute across different geographies, verticals. All of that will contribute into the growth for Q3. So putting all this together, we see, of course, there is a headwind, which is there is going to be furloughs in this quarter. We've considered all that, and we feel confident of a strong Q3. And followed by that, Q4, again, the large deal will have another step change in the growth. And then, of course, in January, the furloughs won't be there. So that revenue will also come back. So all of this adds up to these numbers.
So Prateek, let me pose the question a bit differently to you. The CQGR ask rate for next 2 or 3 quarters is 3 to 4%. Now this compares with 0.5% organic growth we saw in Q2. Now how will you achieve this 3 to 4% target? Because it's an aspirational number, but realistically, do you think it will happen?
So it is certainly not aspirational. Our aspirational goals are typically longer term in nature, and the guidance that we have given, the exact numbers for the next 2 quarters is 2.6 to 3.8% in each of the quarters. And we are very confident to meet that based on one, the large deal. So in Q3, you will have 2 months contribution, November and December. And then in the March quarter in Q4, we will have all the 3 months. So it will be like 1 month extra. So that deal itself, the size of the deal, 2.1 billion over 6 years. So the run rate for that is average works out to 330 million per annum. And that is the large part of the 2.6 to 3.8 range, which is services growth organic, nothing to do with the ASAP acquisition, nothing to do with the software business. That is just services business organically growing at 2.6 to 3.8. I know it sounds different from what you've been hearing earlier, but yes, that's what we are confident of delivering. Absolutely.
Okay. And wanted to get in a take as well from you then, Mr. Vijayakumar, as to what the outlook is that in Q2 that led to the poultry growth. Would you rate your client conversations as getting incrementally more positive, or spend environment, do you think, is the same as what we saw in Q1?
See, Q2, we would have loved to have another 1% or so growth, but it came at 0.5% because if you look at our services business, normally there is a services component and then there is an asset component. So our services component has grown probably a good 2%, but assets came down from 75 million to 50 million roughly. So that was a one-time thing. So that probably had an impact. So I believe one has to look at the true services growth, which is much higher than the 0.5%.
Right. Vijayakumar, what's the internal expectation for FY25? Given the strong deal wins, I guess one shouldn't rule out a double-digit growth for you for the fiscal FY25, that is?
I've always been mentioning that in the long term, this is a double-digit growth industry. Technology intensity is very high across all industries. A lot of fundamental business processes would get disrupted with AI, and Gen AI would really have a significant impact. But all of that requires the technology work, the underlying technology work to be done. So I would say long term double-digit growth is what I'm expecting. But FY25 itself is a little difficult because of the reason there is a lot of volatility in different aspects of the business, right? In terms of how the ecosystem partners are looking at these opportunities, how are the decision makers looking at their own budgets coming into the next year, what are their business priorities, and these priorities also change. So we are really living in an environment where some of the business decisions are volatile. So it's too early to even get a sense of FY25.
So Pratik, a standout matrix this quarter was very strong margin beat. In Q3, do you see headwinds on account of wage hikes, or do you see this will be offset kicker? And Pratik, how's the pricing environment? If you can just quantify both of these things together for us.
Q3 is typically our best quarter for margins, led by the software revenue peak, which pretty much most of it flows down to the EBIT of the software business. If you see our last year, December quarter was 19.6%, compared to 18% of Q2 last year. So this year Q2 is 18.5. So we should be hitting a peak in Q3 like we normally do on a seasonal expectations basis.
So, Prateek, tell us a little bit more about the outlook on the pricing environment.
Pricing continues to be stable. There have been times in the past, couple of years back, I remember we called out, there were one or two deals which, we saw really irrational pricing behavior, but that is not the case now. We are not seeing any of that at this point in time. I mean, it can change very rapidly, as you can guess.
Mr. Vijayakumar, deal wins are very strong this quarter. There's no doubt about that. But how's the funnel of deal pipeline post this conversion which is going to take place?
See, last quarter we did call out that our pipeline was at its highest, and that kind of commentary we had over the last 2 quarters, saying our pipeline was at its highest. Given that we've had significant conversions in the July, August, September quarter, the pipeline has come down. Having said that, our pipeline is still uh, maybe 10% below the highest levels. So I would say our pipeline is very strong at this time.
So, CVK, what would be the deal rate going forward? Back to $2.5 billion per quarter?
No, I think our aspiration is 2 to 2.5. I think the point to be noted is our booking numbers that we disclose is the net new contracts that we sign, where we have a firm commitment of revenue for a certain period of time. This does not include renewals. This does not include rate card and framework deals. So, to that extent, a 2 billion incremental new business being signed every quarter every quarter is a very strong growth driver for the company.
And Prateek, the headcount reduction, is this going to be the trend over the next couple of quarters, according to you?
No, I don't expect that in the next couple of quarters. Basically, because the growth that we have talked about, based on the guidance, if you back calculate 2.6 to 3.8%, that will not kind of happen. We've cut down because we needed to, and we did not need to backfill all the people that were attriting. Basically, because the freshers that we hired in the prior 12 months or so are now ready and raring to go. And we are all raring to go after the 2.6 and 3.8 range now.
Right, Mr. Vijayakumar, Prateek, both of you, thank you so much for taking the time out and joining in. Yours perhaps is the only stock which is actually comfortably in the green after its earnings, 2.6% higher for HCL Technologies as we speak.